Hi Dreamers, I've been thinking a lot about how to juice my portfolio. As you know, I have about 1.5 million in a highly diversified dividend stock portfolio. But today I'm going to cover some high yield ETFs that I've been thinking about playing with. So here's what I have today. I've been establishing a position with SCHD and now have about $22,000 here with a yield of 3.38. But when I discovered DIVO, I started adding to this position quite a bit, and I'll explain why in a few minutes. Right now, it's starting to catch up to SCHD with just over $17,000, but with an even better yield of 4.78. I also have had a nice position in BST with just over $12,000 now and a really nice yield of 9.57. But these are some of the new positions that I've been playing with. PTY, a bond fund, JEPI, a very popular ETF, QQQX, and BDJ. And so in total, I've got $67,000 with an average weighted yield of 6.43, generating about $4,000. And so my question to myself has been, what could I do to actually juice this and bring me even more income in the short term? So of course I started playing with my TD Ameritrade income estimator tool, which is, as you know, one of my favorites. And I started thinking about, what if I brought that total to about $100,000? Could I actually get $8,000 in income? And what might that look like? And so I added all of those positions in. And here you can see a what if scenario where I tried to keep it around even, about $13,000 to $15,000 each. And of course you can see JEPI is the highest yield, paying monthly, and even at less than $14,000 would be generating the highest amount. That would be followed by PTY, which has the next highest yield, also monthly, and could generate $14.25. If I had about $15,000 for BST, I'd also get $14.25 from it. $15,000 or 700 shares of QQQX would get me about $13.81. And for BDJ, 1,500 shares would get me $1,000, followed by the lower yield ETFs of DIVO and SCHD, bringing in about $700 for 400 shares of DIVO and $500 for 200 shares of SCHD. And you can actually see how that would play out across the year in income, with March, June, September, and December being the highest amounts, simply because QQQX is quarterly, and so is SCHD. And so I started thinking about this what if scenario, and then went to my Seeking Alpha tool to see how all of these have performed over time, with a couple of other ETFs that I wanted to take a look at and do some research on. So here we are in Seeking Alpha in the Peer Comparison tab. And so it's all the ones we were talking about, plus a couple of new ones, RVT, DNP, and UTG. And so the next thing I did was change this from price return to total return, just so that I could see not just the yield, but also take into account the price return. And in looking across 10 years, right away you can see the clear winner is SCHD with a 242% return. But the next highest one is actually BST with 192%, followed by QQQX at 165, and then one of the new ones I've been looking at, which is BDJ at 157%. So that's followed by RVT, DNP, and UTG. Now, DNP and UTG are both utility funds, and they actually have pretty high expense ratios. So that's a bit of a negative. And to round out the category, we've got DIVO at about 100% return, PTY at about 100% return, and at the very bottom, the lowest, worst of all, is JEPI at about a 37% return. Now, of course, you have to take a step back and remember that we've had a lot of jostling from 2020 all the way until now. And so you have to be thinking about where the puck is going versus where it has been. But just taking a look at the past numbers, you can see that SCHD has 10 years of consecutive dividend growth, which is fantastic. And BST also has 6 years of consecutive dividend growth. And take a look at these CAGR numbers, almost 14%, 18%, And in the last 3 years, QQQX has been incredible, followed by BDJ. After that, the numbers kind of fall off a shelf, with RVT, DNP, and UTG not performing as well. But then you go over to DIVO and take a look at this 5-year CAGR. Fantastic. PTY has been down because bonds have had a really terrible time. And also, JEPI is just so new that you don't really know what it's going to do, which is part of the concern that I have. And you can also take a look at the price performance across SCHD, BST, QQQX, etc. as you go down the line. And some of these only have a 1-year performance because they are so new. The other thing that's interesting is just, looking at assets under management, where you can see the relative size of these, from SCHD with 45 billion to BST, which is about $1 billion. But take a look at this JEPI number, $18 billion in a very new fund. Sometimes I wonder if that's a bit of a red flag, with so much money flowing into this fund so quickly. So as I go back to this chart, clearly SCHD is the best performing, and I already have a good foothold there. But I'm wondering if I could juice my income with potentially BST, QQQX, and some more BDJ, in addition to potentially DIVO. So the next thing I wanted to look at was just how consistent do they pay out, what their expense ratio is, and exactly how do they pay out. And so starting with BST, you've got the total yield, but then you have to take away the expense ratio of about 1%. So that's something to consider. And then as you look at how it pays out, it does pay out in some dividends, but also in long-term capital gains and short-term capital gains, and return of capital. And the distributions look like they're pretty consistent, so that's nice. But because of this, I wouldn't want to hold it in a taxable account. Prefer to hold this in a retirement account, unless it's mostly dividends. So let's move on to QQQX. Here we've got that 8.85 yield with a slightly less expense ratio. So that's nice. And it looks like the distributions are pretty consistent, but it's not paying out in dividends. So again, a candidate for a retirement account. And also, it pays out quarterly. So that's another thing to consider. Let's take a look at BDJ. We've got 7.5 and an expense ratio of 0.86, and kind of a hybrid approach to paying out. It looks like it pays out pretty consistently, with a nice addition at the end in Q4. But again, something I'd want to hold in a retirement account. Let's look at PTY. Here's this almost 11% yield with a bit of a higher expense ratio. Nice even distribution, and look, all dividends. It's a good candidate for a taxable account. And personally, I think bonds and bond funds have been beaten up massively, and this could be an area that rebounds pretty nicely. Let's take a look at the chart on this one. So yeah, you can see almost 2150 in October of 21, and since then it's gone all the way down. So I'm predicting this one's going to rise soon, and might be a nice one to catch on the upswing. So right now, I'm liking PTY for a taxable account option. Let's go to DIVO. The way I think about DIVO is it an alternative for SCHD. It's got about a 5% yield and an okay expense ratio of 0.5. It's paying out all dividends, and you get the appreciation. In addition, it's a monthly payer, and it pays out pretty evenly. So DIVO is another option for a taxable account. And last, let's look at JEPI. As we saw, it's got that really nice yield, which I think is the reason why everyone's attracted to it. And the expense ratio is actually pretty nice too, at 0.35%. It pays out quarterly, which is okay, but it also goes kind of up and down. So that's something to consider. So you could hold JEPI in a taxable account, but the question is, what about that total return? Is it going to get better over time? That's a question. And so with all this said, I go back to my original what-if scenarios and percentage breakdowns. I'm thinking that a better approach might be something like this, with a lot less JEPI, a nice tranche of PTY, increasing my BST quite a bit, keeping QQQX around that $14,000, and going heavier into BDJ, which is that other monthly payer. I would continue to add a DIVO and put another 15K there, and slowly continue to increase my SCHD with maybe another $4,000 there. And that's how I could invest another $100,000 into a basket like this that would actually increase my estimated annual income to $8,504. And so over the coming months, you'll see me adding to these positions in particular, with, of course, DIVO and SCHD as my core rock positions. Well, I hope you found that helpful. That's it for today. As a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.